Hello, welcome to Todd Miller TV. 7 a.m. in my office, bright and early. Nobody else is here yet. Wanted to do an update today on why all of a sudden so many people have jumped into the Las Vegas real estate market. And it's not really just the Las Vegas real estate markets. There's other markets similar to ours that people have jumped into. If you're watching this, it's today is August 12th of 2011, and over the last couple weeks, the stock market has just tanked. It's been volatile. It goes up a little, it goes down a lot. It's been horrendous, and it's created uncertainty. So what's happened is, because of that uncertainty, people have looked to find other investments. So what's happened over the last 2 weeks is my phone has blown up, my email's blown up with people saying, oh my gosh, I need some certainty in my life, in my investment life, so I want to now buy some properties. So, here's a little bit of a sort of a thought. If you invest in the stock market over 20, 30, 40 years, you will make more money than if you bought a house and then you own that house over the course of 30 years. The house would appreciate, but then there'd be some inflation and stuff, so you would make money. Stock market, you make more money, which is why the stock market is more interesting. So there's two ways that you can increase the amount of money that you make, okay? So to make money in any investment, you need something called risk. And what that means is, if you're taking risk, then you over time get a higher return. And this is a good example. Let's say you go buy a bunch of small companies that are startups, and you invest some in each one. Well, a lot of them are going to go out of business and you lose all that money, but then some of them may blow up and end up being huge companies and you make a ton of money. That's called risk. So in real estate, there's two ways to take risk. Way number one is flip properties. With flipping a property, you're taking the condition of it, improving it, and then taking a property that's cash only to financing, and then you have a bigger market of buyers. You take a property with a small market, make a big market out of it, you're able to get more money out of it, and hopefully more than what you put into it. You take a little risk, you can get a higher return. You may only get 5 or 10%, but if you take that money and do 4 flips a year, you now get 20 to 40% return. So, and it's doable in this market. We do it every day with investors. We take them down. We don't take them down, but we go to the trustee sale, buy them a house, get it fixed up, flip it for them, and just send them back the money, basically. It's pretty straightforward. The second way to take a little risk is to put a tenant in the property. You always have risk when you have a tenant. People always say, oh, well, they'll trash the house. Well, that's what a security deposit is for. And remember, you always have homeowners insurance. So if they blow up the house, you can always you'll get that covered, okay? So there are ways to mitigate the risk. Right now, we're getting about a 15% return. Values have gone down in some areas 80%. Those are the houses people are really after. The houses that have gone down 80% and the prices haven't changed in 2 years. Because I think people are starting to figure out these homes are in demand, values are going to start going up when the banks stop dumping the inventory in here. A lot of people have seen that, and a lot of people are coming here, especially people from outside the U.S. We have a ton of people from Canada coming here. We have people like Jeff and Claire from the UK who are regular viewers of the show who are coming here like, hey, we've got our money in pounds, we're going to put it in U.S. dollars and buy some investment properties here. Taking those kind of risks, especially when there's a lot of uncertainty, is a relatively safe bet, because here's the bottom line. You are not going to lose money. I mean, you're really not going to lose. It's not like you're going to buy a house and the house is going to go away. Okay, the only way you're going to lose money in real estate, seriously lose, and when I say lose, I mean if you buy a house and then just try to sell it immediately, you're going to pay transaction costs, and so that's going to eat into that profit. But what I'm saying is, it's not like you're going to put 40 grand and 50 grand in a house, it'll be gone in a month. Okay, that can happen in the stock market. That's not realistic in real estate. That never has been. You're buying something that's tangible. You can live in it. You can, rent it. You can do whatever you want with it. Anyway, I just want to give you an update, sort of give you a feel for why people have all of a sudden flooded in And I see this. I saw this in 2003 toward the end of the year. All of a sudden, everybody started coming to me saying, Todd, I'm interested in a house. I've always rented. I now want to buy. I hear prices are going to go up, or whatever their reason was. They wanted to start getting into real estate and investing. That's happening again. I'm starting to hear, before the sales happen, I'm starting to hear the people come to me going, I want to buy, I want to buy, I want to buy. We know if there's more demand, the prices tend to go up. Not making any promises, but I'm just telling you it's a leading indicator, and it's not one you're going to find anywhere in the news. Anyway, that was my update for today, and I hope to see you on another video. Thanks a lot.